At IBCanada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
I wanted to get your take on it because I think we have a similar view and passion, and that's talking about children and policies, and in our case, IBC policies. Right? I've got the comment: you shouldn't cover your kids because you shouldn't benefit from them. And I think one of the biggest misconceptions is that instead of looking at it as something for them and their grandkids. So what's your thoughts on that?
Well, I say all the time, Glenn, my optimal client is 20 to 21 inches in length. Give me an infant and we can change their world drastically. From a financial point of view, we can put them in a position where they can focus on their capacity of growth and contribution and not worry so much about finance, because we will have looked after that. And with that, we can teach them how money flows and how to get it to flow towards them. So this isn't morbid in any way in my mind. This is all about positioning our children to get out of the rat race that keeps them mired in consumer debt. And spending. So, I'm a very big advocate for looking after our kids using a properly structured process that enables them to maximize.
Completely agreed. It's I love that you say that they can concentrate on contribution rather than worrying about finances. Because if we do our job and we teach them how to, and I'm going to use another one of your favorite terms, how to be proper stewards of this process, then they won't have to ever worry about this side of life. They can truly concentrate on their contributions to society.
Yeah, it's just interesting. What percentage of society do you think go to jobs every day that they don't necessarily enjoy or they downright hate? What percentage?
I'm going to be conservative and say at least 50. And we know it's higher than 50. That.
Yeah, we don't really know what that number is, but many people don't really enjoy what they have to do. And so they long for the weekends. And I go, well, why is that? Why do we look forward to the weekends? Because we don't have to do. And I'm going, why are you doing things that you don't want to be doing? Well, I've got bills to pay. Oh, well, why? It's just a perpetual question that says, you get caught in this rat race, and we live in an artificially stimulated, artificially propped up economy, and we become a pawn on that chessboard of life that somebody else is really ultimately controlling. But it was our decisions that got us there. And think about that for our kids and our grandkids and our children and our society. What would happen if they actually were able to and positioned to pursue the things they're good at, pursue their dreams, pursue their strengths, pursue their passions, and live and contribute in a society free of financial stress? And I'm going, how cool would that be?
That's an amazing thought. And, I again, having had these discussions, I know some folks will say that's a little pie in the sky, but I completely disagree. When you have a solid foundation, and you can truly explore your best way to contribute and to exist, it's going to make a better you than the stressed out person who has to go do things. Right?
I think it's educational as well, Glenn. And I think that's probably part of the piece that I love about kids. And I often say this to my clients. Let's talk about your kids. They haven't made any bad choices with their finances yet. It's far easier to build a really good, solid financial plan for our kids because they haven't screwed it up. They haven't made any mistakes yet. They haven't gotten caught doing things that aren't in their best interest. Money's one of those things. Money has got to flow. Money is always in motion. Whether you see it or don't see it, believe it or don't believe it, understand it or don't understand it, money is always flowing. It's just not often flowing towards us. And it's flowing towards somebody else. And we have it and it disappears. And I often hear people say, man, it just feels like money. Where does it go? It just seems to disappear. And I go, oh, it's flowing. It's just not flowing to you, and it's not flowing back to you on a very consistent basis. And so you think about that for our kids. if we could change the flow of money and have it flowing towards you rather than away from you, who wouldn't want that? So, Glenn, in your world, have you figured out how to get money to flow towards you?
You know what? I'm doing that and I'm happier for it. And that's part of the enthusiasm of saying, I got to tell this to anybody who is ready for this message, because most people aren't. All right. And just to see the discovery in their faces when it starts making sense and it's clicking, and being there to help guide them through the process. Oh, it energizes me every day.
It's pretty fun. And the reason I love looking at kids is the fact that we can do this for our kids because they're so young. It's quite easy to do, and it doesn't require a great deal of sacrifice. When we start looking at our own lives at 40, 50 or whatever, 30 even, we just don't always have the excess capital to redirect. So how do we get a pool of capital put aside so we can actually use it? And a lot of people in society don't have any reserve capital. And I'm going, well, let's get some reserve capital for your children then, so that they don't have the same problems you have when they need to make purchases. And Glenn, you and I were on a call this week with a couple of our colleagues, and Steve mentioned that at one point while living in Calgary, he bought a $50,000 truck. And we talked about what the lost opportunity. Do you recall what that number was, Glenn? The lost opportunity over his lifetime?
I think about $247,000 on that $50,000.
It was $573,000 over his lifetime, and $247,000 to
yes, we
age
looked at
65.
the age 65 to 24. That's correct. And that's mind-boggling.
It's mind-boggling. So the question becomes: is that $573,000 that he lost over his lifetime, is it real? That's a question for you. Is that real? Does it exist?
It's real, and it's in somebody else's hands, unfortunately for him, for that particular purchase.
Exactly. It's in somebody else's hands. And so why do we let that happen?
No, and that's a great question, Wayne. And that's a huge part. I think we're changing the narrative as well, because a lot of the conversations I've had in the past with parents and grandparents, they kept thinking death benefit only, death benefit, not the actual usage of the money that we build up in the secure storage facility, right? And that's where we're steering the conversation more, to say, hey, we're not talking about death benefit. That is still a great thing for their children and grandchildren. That could be 3-5 generations ahead we affect. But what can they do with access to this cash in a secure storage facility that nobody can tell them they can't access, and they have control over that? What can that do for them if we show them how to use, operate, and steward this thing properly, so they can continue with their kids and grandkids as well? And that's the exciting part for me, and I know for you as well.
And they grow wealth, right? They become wealth creators instead of survivors. Mm-hmm. And, I have a presentation I do periodically, Glenn, on kids. And I talk about the fact that my grandson, Jakey, when he's 20 and he goes out to buy a vehicle, I'm guessing by that point he'll have to pay $25,000 for a fairly well-used vehicle. And I said, like all his friends, he's going to have to go buy that vehicle. But like not most of his friends, he's going to do it differently. And as a result, that money that's going to flow away, in his case, that $25,000 truck, I know it's going to be available to him, the capital, because I put it there. I actually built the structure and I'm funding it. I know that money will be there. And when he buys his truck, I'm going to show him how to buy his truck so that he can actually have the money flow back to him. And instead of that $573,000, in Jakey's case, it was $286,000. That $286,000 that is real is going to end up back in Jake's hands. And he's going to replicate that many times. And I'm going, that's going to distinguish him or differentiate him from his friends, from his schoolmates, because most of them are likely not going to know how to do this. And I'm saying, wow, well, why wouldn't we tell them? Why wouldn't we help parents and grandparents figure out how to get their flow going towards their grandchildren? And then, if they're going to have wealth in their hands, then you better teach them good fundamental principles and values because it can destroy them. But once they figure out how this works, it's a risk-free, it's absolutely simple. There is no downside to it. And every upside that you might think, well, I would rather do this, well, then do that. That's the beauty of being put in control. And so, are you in control of your structures, Glenn? Do you get to make all the decisions?
I do. And let me tell you, ever since I've learned this process and started practicing it, my mindset is totally different. I am so at ease. I try to describe it, and I just have to show people this is what it does for you right now. This is what it's going to do for you going forward, and you get to be the person who determines those trigger points. It's not you're locked until age 65. You got to do this for 25 years before you have access. It's like, no, if the right opportunity comes and you want to take advantage of it, you've got the trigger. So you pull the trigger and you go get those funds and do what you want, right? And that control over use of your capital, or having access to cash to use while you have your capital grow securely and continuously every day you draw breath, that's peaceful. That's confidence building, right? And I want that for my kids, and I know you do for your grandkids and the clients that you come in contact with.
Yeah, and I think, another piece that I'm a bit of a stickler on is understanding that cash and capital are not synonymous. I say that all the time, and in every video that I get to help educationally, that's fundamental. My grandkids won't know the difference. They will not know that they aren't synonymous. They just will always understand capital, and they will understand the power of capital, and they will understand the power of preservation and protection of their capital. So capital has an acquisitive component to it. It has the ability to reproduce every day or with every beat of your heart. Once you understand that, you're not going to part with it. It's like the goose that laid a golden egg. If you had a goose that laid a golden egg and every day you could run down to the barn and collect that egg and sell it and put $1,000 in your jeans, you're going to build the most incredible goose house to protect that goose against predators and environmental conditions, because it is a production machine. You would never put it at risk. And I'm going, well, that's what capital is. That's what capital is. So for my grandkids and for your kids and your grandkids and the listeners that are with us today, let's figure out what capital is. And once you see it, you can't unsee it. Once you understand it has this incredible ability, and it's always had it. It's always had the ability to reproduce itself. Why would you take an appreciating asset like a dollar of capital and exchange it for a depreciating asset and then lose the opportunity costs that go with that if you had an option? And the reason people do it is they don't know. And I'm going, well, that's kind of what IBCanada Group is all about. How do we help people understand? You don't have to do this. Nobody's going to force you to do it. But once you understand, you're going to go, why? I hear this, and I'm guessing you hear it from your clients all the time, Glenn. Why have I never heard of this before? I go, I don't know. It's been around for a long, long, long time.
I was saying, and I've said to clients, I go, look, this is my 20th year in the insurance business, right? And it was 3 years ago that I started paying attention to this. So I'm in the industry, and I didn't quite see this in this way. I've seen the structure, and I've used the structure, not as efficiently as we show people, but I have been using the structure for my kids. And now that I know how to be more efficient by setting up the right type of policy, I started up some additional ones. My kids are going to be in a fantastic position, and that truly excites me. And we get a lot of people who still give you the weird look, like, I don't know about that. So I try to reason with them in ways I know they'll get. And I use the example of a rental property. I said, play along with me. You've got a rental property with a set cost, with set payments. You're going to have a permanent interest rate, we'll say, that you got to pay. So that, the costs aren't going to surprise you. You've got guaranteed clients, so you got guaranteed money coming in. You know that your cost of your rental property will never drop. We're going to be in fairy tale land, but play along with me. So if your rental property is going to be worth more year after year as long as you live, and you need money, would you ever sell the property, or would you tap the equity? And when I say that, they go, well, that'd be stupid to sell it. I tap the equity, and I go, why is that? Because the property is going to be continuously worth more, and I can keep going back. I go, exactly. Exactly. But we don't have to deal with tenants or changing roofs or breaking down fences or fluctuating property taxes. This is a whole different structure. And here's the beauty of it. As I said to one of my best friends he's very into real estate, I said, here's the beauty of it. You don't have to choose. You can use this to fund exactly that. That's the beauty of it. There is no restrictions on what you choose to use it to fund. You just make sure you control that capital and hold on to that machine for as long as you live. Because understand, as we said earlier, Wayne, that money is there. That money is going to be forever there for someone to control. And if you want to give it away, someone else will gladly take it. I would rather hold on to it.
Well, and I think the other piece of that, Glenn, is that so many people are looking for a big rate of return on their investment because they need that. And I'm going, how's that working out for you? Have you done the math? Have you figured out what that really is? And the markets, they're volatile. They go up, they go down. There's good days and there's bad days. But when you start to understand that you have the opportunity to control your system, you can look for and find the perfect opportunity and then seize upon that. I say, put your dollar out on assignment. And when that opportunity finishes, that dollar is all coming back to you, plus all the growth or equity. It's all going to go back in your system, positioned for the next opportunity. And you're going to continually be on the lookout for that opportunity. That's what I want for our clients, for our young people as they grow up, for our kids to be able to have this intense awareness of opportunity, and they know what they're looking for. And because they know what they're looking for and they have a pool of capital with which to work that has been built for them, they can seize upon opportunities. They can put their dollars out on assignment. They can actually do extremely well and have it all come back to them, plus the growth. I mean, that is so incredibly exciting to me. And most of us are trying to find dollars to seize opportunities. And while we're looking for the dollars, the opportunities disappear.
How true, Wayne. How true. I love that you said, send those dollars out on assignment, right? Your mission is to go and come back with some friends. Go and come back with some friends. And as we talked about fluctuating markets, there is nothing worse than when you've put money in the market, you have a set time when you need it, you're going to take it, and the market decides this isn't a good week, or this isn't a good year, because we're down, and now you're going to lock in those losses. Well, if you've got this system that we talk about, where you've got access to other cash, you can go, you know what? Now it's probably not a good time to access these funds. Let me go over here and take these funds over here because I have access. It gives you more choice, right? More choice, more control to make some of the very similar choices, but with better results because you control the lever. And that I don't think people get enough of. And that's part of our mission at the IBCanada Group, is just to get out there and show people the money's there. Somebody's going to control it. It should be you. And if you choose to be that person, here are the different levers that you can pull and push for your benefit.
And it's the compounding, the uninterrupted compounding, that actually becomes almost incomprehensible until you do the math. Mm. And when you see the numbers, you go, well, that just can't be true. And I'm going, it is simply uninterrupted compounding that has been allowed to grow without anything interrupting or hindering it. And if you just go back to probably grade school math, you begin to realize, you know what? Math is math. Multiplication is multiplication. Subtraction is subtraction. And if you want to continually mess up your financial system, just interrupt the compounded growth. And we do it every single day until we figure out that there's a way for us to do it differently. And, people say, I don't want to pay interest. Oh, well, you may not have an interest payment, but you did have an interest cost. You just didn't realize it. And that interest cost was very, very high.
I love that.
And so I think that's important for people to wrestle with. Are you trying to avoid an interest payment, or are you more concerned about avoiding an interest cost? Because they're very different questions.
I love that. I love the way you put that because you're right. As our Nelson Nash, the founder of this, the discoverer and founder of this principle, who wrote about becoming your own banker, said, everybody pays interest, right? You're either giving it away or you're getting it. So you're either paying it to somebody else or somebody's paying it to you. But there's always interest because, as you say, money always flows. And the more we can keep it flowing back to us, the better we will be. The more it flows away, the better other institutions and people get. So I have done enough of that flowing away. I don't even want to calculate how badly that's happened. I just know going forward, it's going to be a different story. Right?
It's going to be a different story. And the beauty, Glenn, is your kids and your grandkids will benefit because you have done the hard work of thinking. You have done the hard work of paying attention to what's actually happening. And it's not rocket science. We finance everything we buy. That's the bottom line. So we better figure out whether we want to finance with a little cost or with a really big cost.
Fair enough, Wayne. And I know we could talk about this for hours, but we're going to wrap up here soon. So in closing, and that was a great statement, someone who's saying, I need some more information on this. What about this thing for my child or grandchild? I mean, what do they do? Well, we see the big sign in the back. We got IBCanada Group. You've got Wayne Dirksen there. You've got myself, Glenn Griffiths. You've got advisors right across Canada that can definitely help set you on the path with this. So what would you like to impart as kind of a closing gift to parents and grandparents?
I would say to parents and grandparents, you owe it to yourself to at least do the hard work of discovery. Whether you ever decide to move forward or ever decide to act on your awarenesses, you probably owe it to yourself to at least say, I'm going to do a little bit of research and digging to understand and see whether or not this resonates for me and whether it can work for me. And it may or it may not. What you'll discover is you're not going to find pressure because we're more interested in helping you really grasp the concept than we are in trying to sign a document for a sale. Because once you grasp it, you can't ungrasp it. And going forward, you have to tell your friends. I worked in an academic environment for a number of years, and one of the things my academic colleagues quite disliked about the way I speak is this. I would say you can't not ignore this. You just can't not ignore this. And they go, you can't use that. It's a double negative. I think they say, well, there are some things you just can't not do. You can't not ignore systems that are going to actually benefit not only you, but your bloodline. And then as Nelson Nash said, you're limited only by your imagination. I mean, start to think about what you could do as a family while you're building these structures that will serve your bloodline forever. It's incredible. So I think that's my challenge, Glenn. You owe it to yourself to spend some time at least discovering whether or not the flow of money in your world could use a bit of an overhaul.
Great addition. You know, one of the things I myself will say to parents and grandparents, and as a parent myself, I'm looking going, I want legacy. I want as strong a legacy as possible, right? And if I'm going to be doing things for my children, I want to give them the most efficient tools possible. And it's not just the tool, but it's the mindset and the confidence it brings. So as you said in the beginning, they can go and contribute in the way that makes the best sense for them and just make their lives, those they impact, and the world at large better. And that can all be done by us putting the right gifts, i.e. the right IBC kind of policy, and the stewardship, the understanding of how to use it and treat it properly. And make sure you grasp that capital tightly and never let go. These are the things we can do. And especially grandparents, they have a little bit more runway to look back in life and say, you know what? I've done a lot. I want the best for my family. Let me find one of the most efficient and strongest tools to use. And when they do get it, you witness it yourself many times. It's just a fantastic thing. and they just grasp onto it and just want to impart that to their kids and grandkids. So love the mission that we're on and love the impact that we're able to have.
Yeah, it's fun, and I appreciate the opportunity to work with good people like yourself, Glenn, as we steward the message.
Likewise, Wayne. Thank you so much. And guys, we're going to ask you to like and subscribe. And we've got quite a few videos out there, so please consume that. And again, as we said, you can click and get more information on any of us and get in touch with us, and we'll be glad to sit down and have a more personalized chat about how you can make things better for your own family by becoming your own banker.
IBCanada Group, your independent authority for information on the infinite banking concept.